Hey guys, what is up? Today is our first day of swing trading live. It's going to be amazing. There's so many fun things planned for today over top stocks, market breakdown, and all that stuff. So because this is the first time doing the live stream, I kind of want to give you an example of what to expect. So as you can see here, swing trading live is what we do. We're going to be doing it every single morning from 8 a.m. to 9:30 Central Standard Time to break down the market and all that stuff. But the swing trading live show is the only live stream for swing traders who want to profit, learn about new strategies, and potential breakout stocks before anyone else. We'll be covering that every single day, so make sure you don't miss out on that. Also, here is my promise to you if you watch this live stream, or at least have it on in the background and like have it listening on while you do work or whatever you're doing, is that you'll be able to understand the current market direction. What is the market doing? We're going to be getting into that right after this little segment here. Then we're going to be getting into trade plans for great stocks. What are the best stocks for today? What are the trade plans for them? And how can we use those to kind of profit and swing trade and stuff like that? Next is learning something new. I hope that you learn something new from every single live stream. I'm going to be introducing concepts and trainings and stuff that hopefully you'll be able to learn something and take something away to make you a better swing trader, whether that be a strategy, a tactic, or just mentally you start to understand how this all works and connect with other amazing traders. So hopefully in the chat, we start having people who can hopefully come in. Now, again, this is a very new concept for me to do this live trading, but I'm so excited for it because I know that over time will eventually garner more and more views, more community, and it'll build up and it'll be a lot of fun. So that's kind of what we're going on here. This is what a typical schedule looks like. Is we do the welcome, we do market analysis, we go over top stock, have the opening bell, then we do a training segment, then we do how stupid is stupid, which I'm so excited for. I have a great one for today, and then we do some live trading, then a farewell. So anyways, that's about it on what we have there. So anyways, so excited to do this live stream with you guys today. I know we probably won't have a lot on today, but I'm still so excited because I know I'm going to be going through some really important stuff that's going to help anyone who's watching. So let's just jump into it. So this is the screen that we're going to be going through. We're going to be looking at the market breakdown first. So again, if we're just going to go over here to SPY, because when we look at the market, what we're looking at is the overall market. So the S&P 500, which tracks the top 500 stocks. So when we look at the S&P 500, we get a comprehensive view of how the market is performing. So SPY is our ETF to track the overall market. If you can see here, what we're basically looking at here is the blue line is the stock. And then just this indicator here shows how well the stock is trending, right? So if the blue line is above the green, it's trending up. If it's below the red, it's trending down. So as you can see here, we had a massive sell-off on Friday, which led to the market getting below this red line, meaning that the market's kind of downtrending. You can see here that the most recent close of last week on Friday was 405.31. But if we actually look at the chart now, it's actually a lot lower than that. You can see pre-market, although it closed at 405.31, pre-market, which is the trading that's been happening over hours right now, puts it at around $402.27. So the stock market is already down $3 in the S&P. So when that translates to for the futures is about a 30-point move to the downside. So again, we're already moving down pretty far already. And so we need to look at what is our game plan, how we're going to respond to this as swing traders. Is that going to continue or are we going to bounce? So let's actually look into it a bit more. If we go into the 1 minute chart, let's kind of zoom this out. You can see here that basically what happened on Friday was this. We kind of had a rejection up here at the high. So again, if you don't really know what that is, we hit a resistance here at this point at around 419. That 419 resistance just could not hold. It formed what is basically known as like a double top, where we hit the top and then we hit it again, or you could even call it a triple top, whatever. This was a solid resistance point that just could not break above. And so after that solid resistance point happened, we kind of formed a support level right at this level right here, which is about 415. And so again, this was our support level. Why? Because we held support here. We bounced. Strong support levels across the board. And then we even came down and we dropped early Friday. We came down, we dropped, and we held the support level. And then next thing you know, we dropped it. So once we broke this support level, we knew that the trend was not going to continue. And then we had a slow sell off the rest of Friday. And so now what we're waiting for is for the market to open today to see kind of what's going on. Now, again, if we want to get a better understanding of what is happening in the S&P 500 right now, we can actually go on tradingview.com for free and type in ES1 exclamation point. This will bring up the S&P 500 futures. The futures trade after hours, which means starting Sunday at 5 p.m. Central Standard Time, the market opens and starts trading and starts being active. So we can actually look at all the price trading history on the S&P 500 so far since last night. And so we can actually look at that. Let's go into, let's say, a 5-minute chart to kind of get a representative view here. You can see here how this is the Friday sell-off. You can see the close here. Let's remove this just to get a better view. Right here. So this is where the market opened last night. It opened down about, let's see, 43 to about 25. So about a 10-point drop in the S&P 500. It's just a 10-point gap. Now, again, one thing you must know about gaps, but it's already been proven here, is 9 times out of 10, statistically speaking, gaps will fill. What does that mean? It means that if a market gaps down, 9 times out of 10, that stock will eventually come back and fill that gap. It may continue crashing. It will at least fill that gap one time. And this is the same thing happens if the stock gaps up. So again, if we have a stock that gaps up, it goes here and then it goes here. 9 times out of 10, it's going to eventually hit here and maybe continue up or maybe continue down. But 9 times out of 10, it's going to fill this gap area. So that's something important to know and watch out for. Let me transition back and remove drawings. Okay, so this is what the S&P 500 is doing. It's been remaining pretty flat. Now, this is not the best news, right? I mean, it's not bad, but it's not the best news. So what is happening here? We had a huge sell-off on Friday. Now, so far during pre-market, what's happening? We're just staying flat. Nothing is happening. So that means that there's an equal fight between the bulls and the bears, right? Everyone who's bullish is holding it at this level. Everyone who's bearish is holding it at this level. Nobody wants to push higher or lower. Now, again, one crucial important fact is that we're our pre-market on Monday. No one's actually officially trading yet. And so if no one's officially trading yet, this market's not going to move how it should be moving. And so what I mean by that is, when the market opens, we'll see clear direction. But what we are seeing here is this support level is trying to hold. So if we kind of want an idea of what to watch out for, again, we'll be doing another review of the market when it opens at the opening bell. But you can see here that what we have is this clear range. And so how we do this basically is we have a range. If it breaks higher, we'll be looking for breakouts to the upside. If it breaks below this trading range, we'll be looking for breaks below to the downside. And so again, downside plays, we'll be looking into inverse ETFs that goes up when the market goes down. We'll also be looking into options like put options, anything like that. If it goes up, we'll just be buying shares or buying call options, or if you want to get more fancy, you can do credit spreads or something like that. So that's kind of what the S&P 500 is doing at the moment. So again, we don't really have too much going on from that perspective. But that is, again, basically what the overall market is looking at. Now, when we also think about the overall market, we also want to get into a great website, which is called Forex Factory. They have a calendar here. So let's kind of jump into this calendar. This shows us the most important news to watch out for in the market. So what we look for, this is the economic news calendar for the week. What we're looking for are two things. We're looking for red folders and we're looking for USD, right? So USD is going to affect the US market. Again, if you're in other markets, like you're in a European country, and again, ERU, is going to affect you. Or if you're Australian market, AUD is going to affect you. So anyways, if we're looking here, USD, we have FOMC member Brainard speaking. So again, that is orange. So that may be some important. That's going to bring some volatility around 215. Now, again, these times right here for 215 are it's not New York Standard Time. It's never EST, Eastern Standard Time, whatever that is. The time frame for New York is what these time frames are on. So 215 here in CST is more 115. You can tell directions is not my thing. Every time a direction comes up, I'm like, never eat sour waffles, and then people complain that's not the right way to say it, but it works for me. So whatever. Anyways, so today at around 1:15 Central Standard Time, we have FOMC member speaking. So that's going to bring some extra volatility into the market, which means the market is going to move based on what he says. Tuesday, it looks like we have some important reports. So Tuesday around 10 a.m., we have the consumer confidence report, and we have the jobs opening report. Two very, very important numbers, especially in today's market, specifically with job openings. So that's going to be important. And then an hour later, we're going to have another FOMC member speak, most likely regarding the numbers you're seeing. They're probably going to try to explain that. What else do we have here? Wednesday, it looks like we have a non-farm employment change. We have another film team member speaking, but nothing too important I see there. Thursday, we have unemployment claims. We have revised non-farm productivity, and then ISM manufacturing PMI price market index. So that's kind of what's going on there. And Friday, we have a lot of reports coming out. So Friday, as always, will be a volatile day. Again, I'm pretty sure. Let's see. I should know this, but it's okay. I don't. Stock market holidays 2022. I'm just curious if Labor Day qualifies. 2022. Memorial Day. No, that's so past. Juneteenth so past. Yeah. So Labor Day, Monday, September 5th. So yeah, that's going to be Monday. So we're gonna have an extended weekend. So I'm looking at the right days. So what that means is that the market will be extra volatile on Friday. The reason being is because we have a 3-day weekend. The market is going to be closed Saturday, Sunday, and Monday. So that means that all the trades are going to happen Friday for those that want to be closed and open, and we're going to have a lot of extra volatility to make up for Monday. Not only that, Tuesday of next week will also be a very volatile day because of this. And so again, Labor Day on Monday, the market will be closed. So with all that, just talking about closures based on holidays, the market will be volatile. We also have these important reports like the average hourly earnings. We have non-employment change, and we have unemployment rate, which the unemployment rate is going to be a huge number to look into and going to be a huge factor for the market this week. So that's kind of what we have from a calendar perspective. You can see here we're still moving within this range for the overall market. So nothing too much happening here for the overall market because we're just trading range bound until the market opens. If we let's actually take a look at some historical levels to kind of get an understanding of what's going on. So again, if we zoom out, obviously the market is overall positive. And what we see here is the market jumps between trends. There's an uptrend, a downtrend, neutral trend, whatever. This concept was first introduced in a technical analysis book written in the early 1900s called the Technical Analysis of the Financial Markets. I'll get it right. I just want to show you the chart. The Technical Analysis of the Financial Markets. I don't need the PDF. I just want to see the image. Okay. Technical Analysis of the Financial Markets. This was written back in the 1900s by John Murphy. Why am I getting... This is not what I want. Let's do this. Trading phases. Phrases. It's not coming up at the moment, but basically what it is there's different phases of the market. You have uptrend, you have range bound, you have neutral. I want to really find these different trading phases. Who here has that, you're like, I know exactly what it looks like, but I can't verbalize it. Here it is. Let me make this bigger. I don't want to go to Twitter. I want to open this image in your tab. And I'll just make here we go. Perfect. So there's 4 different market phases, and this was introduced in the book Technical Analysis of the Financial Markets, written by John Murphy in the 1900s. And basically we have an accumulation phase, which is a range-bound phase. Then we have an advancing phase, which is an uptrend phase, followed by a distribution phase, and then a declining phase. So this simply means we reset, we trend, we reset, we trend, we reset, we trend. What this looks like in actuality and actual trades. And when you go on a daily chart of a stock, you want to see a stair-step pattern where it goes up, up, up. You like my so what we have is that stair-stepping pattern, and that stair-stepping pattern is kind of what affects all this stuff. So that is what it's called, the 4 market phases every trader must know, and it's very important to actually look into. So that's exactly what we have here, right? We have an advancing stage. We kind of have our distribution phase, and then we have our declining phase, and these phases can actually be taken in on come back. These phases can actually be shown in a closer time frame. So yeah, we're now in the S&P 500, but you can see here how we have our advancing phase. Then we have our declining phase. And then now it looks like we have our advancing phase again. So you can see here how the market is just really classified in trends. Trends are identified based on the previous support levels as well as previous highs and stuff like that. So that's ideally what we look at for that. Now, that kind of concludes our market analysis outlook. Basically, what we're looking at is for support to be found around this level. So today, what I'm looking at again in the ES1 exclamation point is, let's go to a better understanding of it, is for this trading range to hold and then to actually break above it. I'm looking for a break back above maybe a Doji Candle to form today on the daily chart and then kind of see that reversal. That's what I'm hoping for in the market. But again, it doesn't matter what I hope for. It matters what actually happens. So we're going to be tracking what actually happens throughout the day. Now we're going to be moving to our segment today on the top stocks for the trading day. So again, these top stocks are going to be useful throughout the entire week. These top stocks are stocks that are rated based on a technical and a fundamental perspective on most likely to break out and most likely or should be traded by swing traders. So let's take a look at what is happening here. So today's top 10 stocks are LPG, JKS, VEGI, FDS, CCJ, CDEV, NOV, PSX, Play, and BNO. So anyways, that probably means nothing to you, which also means nothing to me. But let's take a look at each one of these stocks, break them down, and understand which one has the most potential and why. So let's do that. I'm going to open all these in new tabs. I just love that sound, it's like, I don't know, not calming. Anyways, let's take a look at the first one here. So LPG, we have this is basically what we're looking at. What we're looking at in this software is the Impeccable Stock software, and what we're looking for, this secret formula for it to have a highly successful trade, is a recommendation of a great buy with a trend score above 90. I'll explain why a trend score above 90 is good here in a second, but the trend score is around 67. So again, if we click on the trend score section here, what we're going to see is that we actually have a trend score of around 67, and it's mainly caused by the overall market having a trend score or affecting it by 54%. So the overall market is 54, which is dragging down the overall rating. You can see here how we have an overall good stock performance for this stock and whatever else. Let's actually make this a bit bigger so you guys can see that better. Again, we have an overall market performance accuracy. This all just shows how well the stock performs, right? Anyways, so is this stock a good stock? Well, you can see here it's kind of trending up over the long term. We are trending higher, but it does look a little a little choppy. So again, if you can see here inside the trading view chart, this is choppy. And what do I mean by choppy? It means that it goes up and down. Look, every other candle is red, green, red, green, red, green, red, green. That is not a type of stock you want to look into. Why? Because when you have a red, green, red, green, red, green, that means that the stock's not going to clearly go in your direction. And you want a stock that's going to clearly go in your direction, because when it goes in your direction, then it's going to be easier to make money. You're not going to be afraid of it going against you and you're going to get scared out of the trade. You want a clear moving stock. So if we move here to like a 30-minute chart, you can see here, how am I supposed to trade this up when it's like this? You can't trade that. That's useless. It's stupid. And so again, as a swing trader, you want a clear, consistent trend where it trends up in a clear fashion. It goes up when it goes up. It goes down when it goes down. It doesn't go like and so again, when it goes like that, it's going to scare you. It's going to scare you out of faster. So again, LPG probably has a good history. Again, if we look at performance-wise, we have about a 9.87% yearly return. So again, that shows what you can make when you're trend follow this stock. The trade history of how previous trades have performed, you can see here that it has performed well. A 7% return in July if you traded this, a 2% return, a 6%. So obviously it does trade well, but it's not my personal favorite, right? If I'm going to spend my money and time on a stock, I'm going to skip over LPG and I'm going to focus on something else. So anyways, JKS, so 86% trend score, which is a lot better. The only thing I don't like, look right here, in October of 2021, we had a huge push up. And then from there, what happened? Well, nothing. It stayed within this range. Nothing happened. It just went flat. And that flat movement is not good. This is another example of how it's not really trending to the upside that well. And so again, that's kind of what we're looking at from that perspective. Performance is probably going to suffer Oh, we have a 66.38%. Well, prove me wrong. Again, it looks like you can make highly profitable stocks on this, probably because the stock moves really quickly. You can see here from a $20 to an $8 price range, which was probably made money on. So let's take a look at that September, October trade. Yeah, right here. That's September 14th, 2020. This stock was alerted by the software, making almost a 245% return. So that's definitely carrying all these losses. But again, you can see recently it's about a 20% return. If you're wondering where all these alerts are coming from, this is again based on buying the trend, which means buying when a stock is trending up versus trending down. And in our educational segment today, I'll actually be going over that more in a section of back testing, so you'll actually be able to see that more and understand that better. But anyways, JKS, and I'm going to show you why, is a very choppy stock. Look at this: red, green, red, green, red, green, red, green, and typically not what you want to look for in a good stock. A good example, I just want to give you an example of a stock that actually works well, is RRC. So again, it may look pretty bad on the no, don't leave. On the daily chart, oh, this is the 5-minute. But when we zoom in to like a 30-minute, you can see here, look, it trends well. When it trends up, it trends up. When it trends down, it trends down. When it trends up, it trends up. This is more of a distribution phase, kind of centered. But you can see here, when it trends well. And that's what we're looking for in a stock. So I'm going to say no to JKS. VEGI, we have about an 80% trend score rating. Not bad. Performance, let's see, about a 3.9. Now, why do I look at performance? Well, because if I can't make at least an 8% return on a stock, then what's the point, right? Because an average market return, if I put my money inside the S&P 500 and never touch it again, it's going to make an 8% return every single year on average. So if I can't make an 8% return when swing trading the stock, then what's the point? So that's kind of what we're seeing from that perspective, a pure math perspective. If we look at it, you can see here, it does kind of it is very choppy here, and then it went up and then went down. No clear direction, right? When we're looking for trading a stock, we want to see a clear direction to the upside. Like over this segment of its history, you can see here how it just was trending up and trending up and trending up. This would have been a great to get into this stock, buy dips, and then sell higher. But right now, it's not really doing that. It's just staying flat, and we can't really trade that. On a trading perspective, you can see here that the volume is also quite low. You can see here how it's hardly any volume within every single 30-minute candle. There's not a lot of volume within every 30-minute candle. There's just no hope for this stock. So that's kind of what we're looking at from there. FDS, 44512. So again, this is an 81% trend score. Again, let's take a look at performance. I have a feeling this is a 7.2. I really like the way this is trending so far. Let's take a look on a more advanced chart. See, this is a great stock right here. The reason why is because you can see here how it's trending well and it's trending up on these sections. And so again, we have these trending areas. So I like that aspect of it. If we zoom into a 30-minute, I assume this makes trading a bit easier. Again, the volume here is just quite low, just something we need to start filtering from. So again, if we can't find any good stocks from this list, then we'll just filter more and do a screener type of search. But CCJ, you can see here that it's trending higher. This is a good stock to buy overall. This is definitely a range bound stock with a ton of volume, which is great. What I mean by that is a range bound. So if we're going to have a low around this level and an increasing high around this level, then this is what is known as trading a support and resistance play, where we wait for it to get around this low and then we sell around this high. Oh, excuse me. See, this is herbal tea. I should not be burping from herbal tea. I also don't know about like a lot of you drink soda or not, but I don't drink soda, so I don't know where that's coming from. But anyways, here we go. So once we have these trading ranges, once we know it trades between a certain range, all we have to do as a swing trader is wait for it to get near that range, wait for a dip buy criteria to form, buy into that stock and head higher. With an 89% trend score rating, this is a great stock. I would definitely keep your eye on CCJ today. What I'll be looking for is I'll be actually looking for a break above this level here. So a break, buying at a break above 27.49 with a stop loss around 26.39. So again, if it breaks above these previous highs around 27.30, 27.33, this would be a great breakout buy. If not, you want to let it slowly sell off to around $22, pick up a dip buy around here and trade it back up to its initial ranges. So you can see here, if we buy this breakout above here, we have a potential of profit up to the next high, which is about 14% profit. So again, with a 3% loss and a 14% profit, that's a great risk to reward setup. But again, if we can wait for the stock to drop around here and then catch it on the next dip, right? If we caught it on the dip here, we would have had a chance to make 12% in the first 7 days, or held it a bit higher, up to 20%, but that would have been about a month hold. So again, that's kind of the potential here. So CCJ is a great stock. It's a great stock to remember for top stocks. CDEV is also going to be a great stock to look at as well, above a 90% trend score, which is something that we're always looking for. If we look at performance, again, we have a 22.16. This is amazing. Who here does not want to make 22% return a year? That's literally 3-4 times the market average, more like 3 times. And you can see here, trend score again, it opened a trade on August 24th. So again, it was like at the beginning of last week, it opened a trade, and now it's up around 3.4%. So obviously pretty good. It traded earlier in May with about a 14% gain. Again, we had a loss here, but again, overall, it's obviously doing well. And so again, CDEV will probably be another top stock. You can see here it's trending well. This is another example of a range-bound stock that we can trade as a swing trader. So again, we go on a larger time frame like the daily chart. We chart out our high and our low. So again, after we have our high and low set, then we go into a closer time frame, like a 30-minute time frame, and then we look from there. So you can see here, once we know that this bottom has been hit and it's kind of reversing, then we can see and we can identify the trend. For instance, this is trending up. Then we wait for a dip, buy to buy. You buy the dip, and then you trade it back to the upside, right? Buy the dip, trade back up. And so CDV has a lot of potential, obviously, mainly for swing traders who like a high risk, high reward potential, because it's moving quickly. So again, your stop loss will be larger than 3%. It'll be about a 6% stop loss, but again, you'll have the chance to easily make 20-25% on the stock. So CDEV is a great potential stock as well. We also have NOV. No. So anyways, this is 77% trend score rating. I don't really like this. You can see here how it just does nothing. Let's see, what is the performance on this? We have a 6.22%. Yes, it's way under yearly market performance, so something we want to stay away from. PSX. So PSX above a 90% trend score is a great sign. Our performance is 11.39% yearly return. That is great, above 8. So again, trade history, you can see here it's been profitable pretty well. It looks like a little more than red, so that's always a good sign, obviously. So again, that's doing well. Let's take a look at a trend view overview of this, get a better look. You can see here how we're kind of trending higher, respecting these main levels. Trending up here, having a resistance at 112, having another resistance where it currently is. So again, we can see here how we have a current resistance that it's hitting into. You can see here that it currently played into this resistance on Friday. We kind of hit into this, and the market did not help since the market dropped to kind of pull this stock down as well. Pre-market, we're even gapping down lower. So we're gapping down lower on this stock, which means we can find support in this level, in this $88 level here, come down to this and hopefully bounce higher. Or we just totally crash through this level, find support around 82.80, and then push higher. So again, either way, this is a great stock to trade, but you might want to set an alert here at 88 or an alert here at 82. And then when the stock hits, you want to wait for a dip buy setup. A dip buy setup is UDDU. Look for an uptrend. Look for a Doji Candle. Look for a downtrend, or a Doji Candle, and then an uptrend. I'll explain more of this in the next training segment tomorrow. I'm actually going to go over how to buy the perfect dip buy. So again, watch the live stream for that tomorrow. Anyways, PSXX is a great stock, but has no potential at the moment. Play is about an 80% trend score with a performance of 26.7% return a year. That's awesome. So you can see here it's kind of trending up right now. We look more into the stock, you can see here it's a very range-bound stock. What I mean by that is you can see here how it's trading between the ranges. But what's more important is not that it trades between ranges, is on a closer time frame, does it trend well? And the answer is yes, it kind of does. Look at this. It trends up well. You can see here how we can set a little trend going up. From there, once a resistance is hit, we can kind of trade the breakouts and make money to the upside. So 24% return on about a 3% loss. So again, when you're developing a trade plan for a stock, you need to look at what is your potential, what is your loss, and can you stand those. Anyways, at the current moment, what we're doing is we are kind of topping out. You can see here how we're topping out at this high. So again, that means one of two things. One, most importantly, since we're forming a double top, we're going to expect for the stock to slowly downtrend to around 32, 34, and then hopefully pick up and we can trade to the upside. Or what happens is we break above this with volume. So if we break above the $44 level with volume, this will be a good breakout stock to buy, targeting this next high of about 49. So again, that would be about an 11% return. So again, if we break above the 44 level, we can go all the way up to 49. So again, play has two different options: wait for a dip buy or look for a breakout to happen. BNO has a trend score of 85%. I love this stock overall. Why? If we're looking back since 2021, we have a uptrending stock. Why? The stock is going from the high to the low. That's kind of what's happening here on the stock. So again, performance-wise, we're about a 35.4% return. This shows it's trending up. You can see here. Right now we're getting choppy, but basically we're just in a distribution phase. If you remember what we talked about earlier in the live stream is we have distribution and trending phases. So again, when the market breaks out of one of these ranges, it's going to trend very well. Again, the same thing on a minor time frame. We have a minor trend right here. Where we're trading between kind of like this range. So if we break out one of these ranges, we'll have potential to go up to the highs. So anyways, those are our top stocks for today. Now the market is open, so let's take a look at what's going on with the market and kind of do there. But first, before we go into the opening bell segment and look at the market, I need to grab a cup of water. So I'm going to kind of play a little intro video here for you guys so I can kind of go check out and get the water stuff. I want to take a quick second to show you behind the scenes of the software that makes this swing trading live possible. Anyways, guys, the Impeccable Stock software helps any swing trader profit in less time. Whether you work full-time, you're a student, you're a family man, you're a family woman, whatever you are, you can use this to profit in less time. It shows you the stocks that are likely to break out before they do, the trade plan for that stock, where to buy, where to sell, etc., and gives you alerts so you can always stay on top of the stock even if you're busy. So let me quickly show you how this works. They have a top 10 stocks that show you every single day. This is sent to your email onto your phone. These stocks, based on technical and fundamental patterns, are the best stocks to swing trade right now. Once you found a stock that you love, you simply go into the analyzer. So for instance, if we were to look into this stock right now, we go into the analyzer section. And what we do is we look at the game plan, where we should be buying the stock, what our take profit is, and what our stop loss is, as well as our risk to reward. This shows us everything we need to know to make a successful swing trade all in one place. Not only that, the secret formula to make sure your trades work out way more than they lose is to look for a recommendation of a great buy and a trend score above 90. That is your secret formula for success. So many people have used this software already to generate huge returns. Matthew making 55% in his first year, and other users making as much as 10 to 20% in their first month. This is the best swing trading software out there because it shows you everything you could ever want to know, like performance, how much you can expect to make every single year trading just this stock. Who here would like to make 27% by just trading a single stock? This is the beauty of following a software that was built by a swing trader for swing traders. You can even filter by the yearly return you want to make every single year, your risk to reward, other technical patterns, and my favorite, the DCF value. This can help you look for undervalued stock as well, fundamentally undervalued, which no other screener around provides. Anyways, guys, if you are a swing trader and you want to take your swing trading game to the next level, be consistently profitable, know what you're doing, be less confused, and just overall have more peace in the market, this is the software for you. Click the link in the description to get a free 14-day free trial. All right, guys, thank you for watching that. Just gave me some time to go do things. Anyways, opening bell, the market has opened. So let's see what is happening here with the S&P 500. So again, we just started out these levels on SPY. But you can see here we're kind of pushing into this level. We are green, so let's take a look at the ES1 just because this morning when we did our review, we kind of had this set up. So again, let's go into a closer chart, 5 minutes, right? So we were looking at this trading range, and so we're still within this trading range. And so what we're looking for so far, market open has been open for about 4 hours. is we're looking for this trading range to break. So we're looking for the market to get above where it currently is. So we want the S&P 500 futures to get above 4041 or break below 4,008. So again, if it stays within those two ranges, then again, we're just going to stay range bound. And again, the best range bound trading strategy is going to be your RSI divergence plays. Outside of that, if it breaks above, you'll be looking to trade breakouts. So that'll be triangle breakouts, movements, moving averages, bounces, and stuff like that. But again, let's take a closer look on SPY, specifically on the 1 minute chart. So again, you can see here that we gapped down, obviously, from Friday. We kind of made that huge move, and now we're filling. Remember what I mentioned this morning is that the market has statistically 9 out of 10 times will fill a gap. Well, this right here is a gap, and so it kind of needs a fill. Now, again, this is almost negated. So like, remember when I said like 9 times out of 10 it fills, which means it most likely will fill on SPY. But you have to remember that SPY is tracking the S&P 500 futures, and the S&P 500 futures actually already filled the gap. So there may not be much of a reason to do that. But anyways, let's take a look at where that is. You can still see here that we're trying to push higher, which makes sense. This happens for a variety of factors. One reason is because people who were looking at this kind of expected the market to gap down on Friday, right? We had this huge red day, and so we had a lot of shorts. And so what shorts are is people selling stock to make money on the way down, right? When you buy stock, you can make money on the way up. When you short, you make money on the way down. And so we had people who were shorting throughout the weekend. And so they were short here. And then when the market opened, they're covering their shorts. When you cover your short, just like when you buy to open a stock or buy a stock, to get rid of that stock, you have to sell it. The inverse happens with shorting. If you sell a stock first, then you need to buy it back. And what does buying do? Buying causes the pricing to increase, right? And so again, this right here could be a nice bullish push, or most likely could be a ton of shorts covering their position. So they're actually buying back because they're making their profit from this overnight hold of making about, a 1% return overnight. Now, again, people who are shorting the S&P 500 are, again, trading with a lot more money than you and me. So again, a 1% return on $1 million makes sense. But that's kind of their positions there, and probably why we have this initial green push. So that's really what's being played out right there. It's a lot of that stuff. But again, no clear understanding of what's going on, right? Because let's actually translate the ES1 over to the S&P 500. So again, you can see here how we have this trading range on the ES1. Where did the market open? The market opened right here. Oh. Oh no. Is this S&P delayed? ES1 open around there. Current price is just a high of here to the next as around 0.24. So again, I'm just looking at it from a percentage standpoint. So again, the first resistance is around 2.4. So again, if we take that high point and we take around a 2.4%, 0.24, then that means that the resistance that we're looking at is around 404.50. So again, this is the major resistance level. This is kind of what's going to happen today. Most likely is we're probably going to see this push up here, little rejection. We'll probably see a bit more of a push to kind of fill this gap, and then we'll see a slow move here and then a slow consolidation. I'm just going to keep this line there, just kind of see what happens. The reason why I see this is because I still see the market as having a lot of holding and bullish activity. The reason for that being we're coming up on the election year coming up in November or so for midterm elections. And when midterm elections happen, there's a lot of uncertainty in the market. But as soon as the midterm elections are over, from midterm elections to 1 year after, the stock market always has its best performing year ever, statistically about a 15% return the next 12 months after the midterm elections. So again, I'm thinking the market's going to try to hold this position, and through midterm elections. Then after midterm elections, it's going to have the best year that it's had in a while, contributing to whatever, just certainty of who's going to be in power. And so again, you can see here we're kind of having this dip already, and starting to push higher, which is kind of like my thought initially. But we'll just see how that plays out. But the overall market, nothing too much happening here with those type of stocks. So that is the opening bell segment. We'll continue to watch up on this and we'll check up on it. Again, there's nothing really to place. Yeah, you can see here how we're pushing higher. We're pushing higher. If you're curious why I kind of predicted this push up, yeah, look at that, it's pushing up. It's gonna have a hard time here and it's gonna eventually break above. But I'll just give you a better look at this. No, come back. Why does it do this to me? Here we go. Let's come back. So yeah, if we're wondering why this happened, it's a clear reason. This is an example of a dip buy approach. And so what happens on the dip buy is we have a push up, we have a down move, we have a doji candle form, which is what this red candle is. A doji candle is small body, long wicks. Then we have a green candle push, and then we continue pushing. It needs to break this high right here, but it already broke. So it's going to build up some volume, build up momentum, and then break above this level right here. Just like that, it's trying to push above. Again, if you really want a clear understanding of this, you can actually see they don't have it anymore. Oh, the DOM, yeah. How many orders are being placed at something specific, or the order panel. Yeah. Yeah, I got a lot of sellers here at this level. See the sellers all hopping around 403 around this high. So it wants to break this high, but the sellers keep holding it down. Here we go. It officially broke above. So yeah, now we're going to see this rip higher. So again, that's kind of what we're looking at. You can see here how we have the uptrend, we have a minor down pull, we have a doji candle form, which is small body, long wicks. Then we have a green candle, and then we just kind of trend that back up. But this also is correlated with the gap. So again, we have that gap that needs to be held. So that's kind of why I drew this out. I think it's going to hit around this high and then slowly start to taper out, but then not really do too much. And I'm looking for a doji candle to form. So a doji candle formation on a 1 minute candle would look something like this. So that's kind of what I'm looking at here for the overall market. Anyways, that's all I have from that perspective. Looking at Lao, let's get into before we break down the market, so you can see here it hit that resistance. It's kind of having a red candle now. Before we get back into the market and our top stocks, let's take a look at our educational segment for today. So here we go. Our educational segment today is on backtesting. So again, I'm so excited. Why? Because as swing traders, the only thing we can know for certain is putting all the odds in our side to have success. And so what I mean by that is, as swing traders, if we have a method and have a strategy and have a system to profit that has been back tested and has been proven, then we can consistently make money and we don't have to worry, we don't have to stress and all that stuff because we know what's happening. And so in this segment, I want to do a quick back test over things. And again, if you have any back testing ideas like, Austin, I had this idea or strategy or whatever, there should be a link in the description below and you can submit any trade ideas you want to submit, any stocks you want reviewed, and we can do that on the live stream. But in today's training video, we're going over back testing. And so let's go over what back testing is. So anyways, the goal of back testing is to help us find a profitable strategy that is proven to work with a step-by-step checklist. And so again, the idea for today's back testing idea is, the big picture idea is buying stocks that are trending up, aka making higher highs and higher lows, actually profitable. So can we actually make money by buying trending stocks? And so again, that's the idea. Now, how are we going to test it? And so again, the idea behind testing it is, let's take a look at an example, right? This is the S&P 500, which we've been dissecting all morning on the live stream. But basically, there's different phases of the market, right? The market is kind of range bound, then it kind of dips down, then it pulls up, then it dips down. So the overall market is full of different phases. And so again, with these phases, most of the money is made when it's trending up, right? Like we want to buy an asset that's increasing in value. If the asset's not increasing in value, what's the point of buying that asset? And so again, we have this trending aspect trending up. And so again, where are we going to put where are our buy and sell signals? So our buy and sell signals, again, if we're making money to the downside, we're shorting, right? We want to short when the lows are getting lower and the highs are getting lower as well. So that would be underneath this band and selling around there. And then our take profit would be when the highs are getting higher and the lows are also getting higher. So that would be, buying above the green band and selling when it breaks back below. So those kind of are like our buying and selling criteria. So the setup for this is a buy signal for this back testing will be when it breaks above the green line, and then it closes when it breaks back below. So again, these are all moving average type setups. Then we have a short signal is below the red line and a close signal is above the red line. So again, if we kind of look into that a bit further, here are our statistics for the S&P 500. If we follow this setup, pulling from the last 14 years. So these are 14 years of statistics. The time period for this backtest was February 2008 to now. Again, the total trades was 63 trades, with 35 being successful. That gave us an accuracy rating of 55.6%. So again, 55% of the swing trades made money. And this, including our losers and our winners, we had an average return over those 14 years of 121% return, with our risk to reward being 1 to 5 on every single trade. So that is obviously pretty good, right? A 121% return over the last 14 years. That actually comes out to about market average. So again, you get to stay out of crashes, and you're generating about an average market return. So not too bad. What does this type of setup look like for the QQQ? So again, this is a 15-year study. So this is from October 2007 to now. So again, ironically, we have 63% or 63 as the total number of trades. Now, again, this is actually understandable because QQQ and S&P 500, although they have different holdings, they operate quite the same. And so since they move about the same, we have about the same number of trades, since the trigger for these trades are about the same. So again, that is a 52.4% accuracy rating. Total return, though, is still higher than the S&P 500, about a 158.7% return, including all losses and winners put together, which gives us with the losses and winners, we have about a 1 to 5 risk to reward as well. So again, QQQ obviously works better and has the higher return than the S&P 500, but that makes sense, right? It moves a bit faster. If we're looking at all stocks in general, so again, this is a more of a recent study with looking at a ton of stocks. So again, studied over 1,800 stocks, 1,809 stocks. And from there, the time period from January 2021 to now, there were 7,228 trades, 3,370 of which were profitable. That gives us about a 46.6% accuracy rating and a total return of 217%, basically over the last year and a half. So again, a 217% return is amazing. And I would say with a 1 to 8 risk to reward shows that this can have a lot of potential. So again, trend trading stocks may have some great potential. Now, again, there is one thing I want to lay out, and that is this. Okay. When you're looking at risk to reward and understanding back tests, you need to understand, does the strategy actually work? And what I mean by that is, what is our risk to reward and what is our win rate? So again, our risk to reward shows how much money we stand to risk versus how much we stand to make. So for instance, if you have your stop loss set at 3%, and your reward set at 9% for easy math, you do 9 divided by 3, and that is 1 over 3. So that becomes your risk to reward of 1 to 3. So 1 to 3 risk to reward. And so when we look at this, if we want to break even, which means make no money, what is the success rate we need to have? And so a success rate for a 1 to 3 risk to reward is a 25% success rate. So that means that if we want to stay even, then we need to win at least 25% of the time. Or a quarter of the time. And so again, if we want to make money, we just have to be more accurate than 25%. And so why did I bring this up? Well, because if we're having, at least on the QQQ, a 1 to 5 risk to reward with a 52% success rate, does that work out long term? Well, obviously the average return is positive, so it must. But we can also look here. A 1 to 5 risk to reward means that we have to be right 70% of the time. but we're right 50-something% of the time. So that means that's way over 17%. Thus, that's why we have the profitable result over time. And so again, that the plus 158% return is because all those math numbers are working out in your favor. So again, the game plan for this, since it works, is again, you want to buy a stock when it starts trending up. You want to sell the stock when it stops trending up. You want to short a stock when it starts trending down, and you want to close that short when it starts trending up. So how do I identify trends? I'll cover that here in a second, but basically it just means when the highs are getting higher and the lows are getting higher as well, that identifies an uptrend. When the highs are getting lower and the lows are getting lower, that is a downtrend. Buying and selling within those ranges tends to be profitable. So anyways, that kind of discusses what we learned. Trend following statistically works based on tracking the overall market, the S&P 500. Trend following even works on most stocks, especially during the tense market. The recent study between 2021 to now, or about 2022, halfway through the year, yielded a profitable result. And again, this strategy can be followed and should have long-term success results if followed correctly. So that is kind of what we did in the educational segment, is learning how to backtest. So again, if you want to learn more about backtesting and using the specific indicator that I covered in this video, then again, you can get your 14-day free trial to the Impeccable Stock software to use that indicator, linked below in the description. But anyways, that kind of covers our educational segment. Let's move on to looking at other stuff here. So thank you guys so much. Let's bring up the chart. You can see here, this is what the market is doing so far. And again, this is kind of how we've been diagnosing the market. Let's look into our top stocks for swing trading and kind of go into that a bit more. So that's kind of like what we're doing. So let's see here. From there, that's kind of what we have. Now, what I did want to kind of cover, though, is what I was a little excited for, is our how stupid is stupid segment. So that's kind of what we're going to go into now. So how stupid is stupid? This segment is basically where we take a trade from Reddit that epically failed, and then we look at why it failed and what you can learn from it and what you can do better, while also just having fun, right? Because trading, there are losses in trading, and some people do some stupid stuff. I've done a lot of stupid stuff in my past, and it's fun just to look at these and just laugh and take a break from the overall market craziness and understand that, hey, there are systems we can follow to be more profitable. Anyways, this how stupid is stupid report comes from 10 years ago from a user called Project Dork. So Project Dork reported 10 years ago on the investing subreddit, traders of Reddit, I just had the worst losses of trading in 1 week. What are some of the things you do to regroup yourself after a bad loss of trading? Well, at least this guy, I mean, I don't know. Let's see, what exactly are these bad losses? I read through this, but I'm trying to react. What exactly was his worst loss in trading week? Because, for some people, $100 may be the worst trading loss, but for others, 100,000. So let's see, what are his? Let's see what he said. I just had the worst week trading. My total losses for the week come to about 13,000. Bro, he just lost 13,000. Let's see, 13,000. Actually, let's do the math on this. A compounded interest calculator. So let's see, he lost 13,000. What would have happened if he took that 13,000 he lost and just threw it in the overall market and never touched it again? Which means that he invested it in the S&P 500. Let's say he's, how old do we think he is? 40. So that means that gives him 20 years till retire. No, 25 years till retirement. Can I do math? 25 years. The market compounds it out in 8%. We're not going to add any money. This dude would have had $89,000 by retirement just by not losing that money. Do you know what you can do with $89,000? A lot. You can buy a brand new Tesla, cash. You can do so much. Okay, anyways, this dude lost $13,000. He went long soda after recording profit earnings. Oh my gosh, guys, never do earnings. Earnings is a 50-50 play. You're never earnings is crazy, right? Based on earnings, you never know what's going to happen. So yeah, don't do this. It had a $4 pop pre-market. During market hours, I love how you referred to the stock as a person, like she reversed. I never look at my stock and go, yeah, she's looking real pretty. Anyways, I thought that was funny. She reversed and turned negative. I usually trade using at least a 1 to 2 risk to reward. I never use a 1 to 2 risk to reward. Oh my gosh, we just talked about this. The reason being is let me actually hide this, pull this up. 1 to 2 risk to reward, right? let's back up. 1 to 2 risk to reward. If you use a 1 to 2 risk to reward, that means you need to be right at least 33% of the time, which is really hard for new traders. So a 1 to 2 risk to reward, a 1 to 3 or better for those reasons. Anyways, so basically, it was a huge emotional effing, and I just want to see what other traders do. So anyways, this dude lost a lot of money, $13,000 in a week. But again, what are we learning? Do not trade earnings. Don't trade earnings. It's a 50-50 play. Also, have a better risk reward than 1 to 3. And also, this dude is trading. We don't even know his strategy. It doesn't even sound like he has a strategy. He's probably just buying it because it's up. And so again, like you said, had a pop of $4, and he's like, oh man, I had a pop of $4. Let's just jump in this trade. And so that's something you definitely don't want to do, is just jumping in trades like that. So again, I would say stay away from that. But also have a confirmed strategy that it makes sense to get in and out of certain positions. Anyways, let's see. Stay calm. Your first instinct is going to be to try to make a bunch of other questionable trades and investments. Don't do that. I agree. This I fail at usernames user is 100% right. This is a thing called revenge trading. If you lose, you try to want to revenge trade. You're like, oh wow, this stock has a lot of potential. I'm going to trade this stock. I'm going to double my size. I'm going to get back all the losses I just lost, and hopefully way more, and then you just go down further. Product Dork says you nailed it. He must have tried to do that. Write about it in a trading journal. Come to terms with it and move on. This is amazing. High five to the deleted user 10 years ago. Why? Because this is important. I highly recommend, like literally every coaching client I have, I advise them to keep a trading journal. Trading journals are a great way to understand what was I thinking in this trade? Why was I thinking that? And going into that and what makes that so important. So anyways, that is kind of like the importance of that and like why you should be doing that, because keeping a trading journal is so important. So everyone should be doing it. If you're not doing it right now, I don't know what you're doing. You should be doing it. Anyways, that's kind of what that is. Anyways, moving on. I agree. Venture frustrations. Only risk a certain percent of your portfolio at one time. Learn how to manage risk. Guys, there has been a study in the market that showed that actually doesn't matter. It's more important where you exit than where you enter a stock. For instance, you can enter a stock, but depending on where you exit determines where and how much money you make. So the studies show that they just let people randomly enter, and people who were able to manage risk correctly made money, and those who didn't lost money. They all started the exact same trade, entered at a random spot. Why was one able to make money and the other wasn't? Again, these were all the same stock entered at the same random price, but some made money and some didn't. And that's because they learned how to manage risk. If you don't know how to manage risk, you're not going to be able to do this correctly. So again, learning how to manage risk, and that comes into using a stop loss, a 3% stop loss by default, determining that stop loss based on the volatility of the stock. Oh my gosh. For instance, if the stock moves quickly, for instance, Tesla moves 3% in a couple minutes, you don't want to set a 3% stop loss on Tesla. But only that is understanding when is it time to exit, and understanding when it's time to exit by having a strategy and having a game plan. And I'm so sad on this because in the live stream, we just did a backtesting segment where I showed you the best strategy to make money. And again, we'll be doing that hopefully a couple times throughout the week so that you can have different strategies that you can play to actually make money with. Anyways. Take a break. No sense in trading. If you're losing money, go take 1 week off and get senses back. 100% agree. You need a break sometimes. I take a break, step back, analyze what part of the strategy was weak, and possibly ditch the entire strategy. Whoa. Okay. This may sound right, but I definitely disagree. Okay. If you have a strategy that you have backtested that works, never ever ditch it just because it doesn't work. There are two key factors here. One, first understand what type of market does my strategy work best in. There are different types of markets and different types of strategies for each market. For instance, there are strategies that work really well in range-bound markets. When the market is very neutral, there are strategies that work very well. And the strategies that work well are going to be RSI divergence plays, MACD divergence plays, support and resistance plays. But those don't work well in trending markets. So understand, are you using the strategy in the right market? If you're not using your strategy in the market it's meant to be used in, of course you're going to lose money. Also, just because you lose money, this is the second thing, just because you lose money does not mean it was a bad trade. If you follow the strategy, again, a strategy that works, if you follow the strategy step by step and you lost money, that does not make it a bad trade. It just means that it went against you. You have to stick with a same trading strategy, the same system, to have the long-term success. If you keep jumping from strategy to strategy to strategy, it's not going to work. It's like when you're stuck in traffic on the highway and you're like, wow, this line is moving faster, and you switch over to this line, and then by the time you get in it stops, and the line you were originally in goes faster, and it's like, oh, so stupid. That's what happens when you jump from strategy to strategy. Anyways, my favorite part of this whole thing is how he lost $13,000 trading, but he's posting this in the investing subreddit. Like, bruh, you're investing. Anyways, whatever. Lawyer up, hit the gym, short Facebook. Okay, that's one option. Thank you guys / ladies. I don't intend on taking my money out. Investing is what I know at this point. I couldn't imagine myself doing anything else. Okay, I hope he means that he's investing and not trading anymore, but he's not holding his money in the stock that he lost money in. Penny trading stocks was what gets a lot of people, and that's how a lot of people lose and blow up their account. They see a stock that's up. They buy it. It continues to go higher. Then it goes against them, and now they're losing money. And then the thought that goes through their head is, I just lost money on this, but technically I didn't sell the stock, so I did not lose money. So I'm going to hold on to this stock because, long-term stocks go up in value, and then it's going to eventually hit my take profit price or higher. And then guess what? I would have never lost money. I just got to hold on to the stock for a while. 2 years later, the stock just keeps downtrending because it's a sucky, stupid stock, and they lost 100% of their account value. So don't do that. If you're trading, you have a game plan, you get out when you get out, and you accept your losses. That's how this works. Anyways, that's just, I love taking this segment just to kind of make fun of people, but also learn lessons. Anyways, let's get into the important stuff. Let's break down some trading and other things like that. Again, this is what we're looking at for the market. Let's remove the drawings here. Let's see, we have our DOM. Let's remove this DOM. Let's take a look at 5-minute chart. Let's start breaking down. So obviously there's nothing much going on here besides SPY being very range bound. I don't expect SPY to be anything much more than range bound today. The reason being because I missed all my comments from earlier. Whoops. Hey, sorry, I'm like looking through the comments. Let me overlay the comments so you can see what I'm looking at. Oh, they don't show up. Let me just show them all. Oh, yeah. So I guess the chat won't overlay because it's not actually happening in real life. So anyways, yeah, we had a message here. Good morning, team. I would love to make 20%. Yeah, no, we all would like. I love Matthew. Matthew is one of my biggest supporters, and it's great to see him places. I miss Bella. Bella was wanting me to look into Galactic. I missed her comment around 8:50, so that sucks. But we can look at it now. If they watch the live stream, we can get into that. So anyways, let's take a look at Virgin Galactic. I don't actually know the name. Okay, SPCE. Okay, that's what I thought. Yeah, so SPCE. The first thing we do when we look at any stock is we zoom out. And you can see here, obviously a hype stock based on volume. When volume comes in, we'll see the stock rip. We're now downtrending to the downside. Not the best stock at all. Something to stay away from as a swing trader. There's nothing you can do here. So that's kind of what's coming up. But anyways, I wanted to just take the rest of the time in this segment to kind of break down other stocks and whatnot. So let's pull up stock software. Let's do a screen for stocks. Okay, so let's see. What do I want to look for today? If you guys have any recommendations on what you want me to look for, go ahead and put that in the comments. But let's see. I want a great buy. I don't really care about price from. I don't really care about potential. I want trends well. Accuracy from at least 45. Risk reward at least 1 to 2. Trend score of 80. I'll just switch this to buy. What else? DCF value above the stock price. That means that it's fundamentally undervalued. Now let's see what we get. Oh, searched already? Wow. Oh yeah, it starts already. Okay, huh? It's pretty fast. I forget how fast it is. Okay, so 33 stocks that it found. Let's sort by yearly return. Okay, here we go. H row. I'll just take a look at all these. H row, MBF, GPRE, Rush B, CDNS, Hawkins. Ooh, Nestle. Wow, Nestle is a corporation. CMS Energy. That sounds cool. JCOM. I don't even know what JCOM is, but it just sounds cool. Then we have JCOM. Okay. Ebony, HTBI, Home Trust. Okay, let's take a look at these stocks. So we have H row, a trend score of 83%. Recommendation of a buy. Looks like it may have some good charting potential. You can see here on a 30-minute chart. The only problem is that the volume is quite low. I realized on my screener I did not set volume requirements, so that may be something. Let's take a look at the trading view chart. Yeah, I did not set volume requirements. Next time I'll set some volume requirements. Overall performance, I feel like it's gonna be good on this. Yeah, 28.8%. This one has decent volume. Any potential here? We have an uptrend that recently broke into a downtrend. Yeah, so see how this trend works is you connect the lows, right? And so this trend continues, and this trend line just broke, which means that we're now going into our distribution phase, which is where we have, our solid high and our solid low, just like that. And so then this becomes a distribution phase, and then our distribution phase changes when we break above to the high, break below to the low, and that's kind of how our trend will continue. So that's typically what you're waiting for on GPR. So if GPRE breaks below 36.3, then you'll actually have a great opportunity to short. If it breaks above 40, 41, you'll have a great position to go long. So that's kind of what you're looking at there. GPRE is a great one. Rush B, interesting. Double top short. Reaches high. It's really too choppy. That we have the red green candles. Yeah, that's something you want to stay away from. Red green is a CDNS. CDNS is always a good stock. What is it? It's 21.17% a year performance. CDNS. Let's look at the stock more. Again, we reached a high, which means we may have the opportunity to short this stock using options. Because look how much space we have to fall. Down to 148. So again, we have a lot of room to fall. But the beauty is, once we hit 148, the stock becomes an amazing stock to buy. Because once we hit 148, then we have the chance of going all the way up. So again, hitting 148, forming some type of dip buy, and then moving higher. Because you can see here how we formed this double bottom last time, and then we kind of hit that double bottom, signaling a reversal, and then hitting about a 22% return. So again, CDNS, even if it only reaches here, is consistently growing, right? So let's actually kind of try this out. I believe this is Fibonacci. Is this Fibonacci? Yeah. So you can see here how we have these levels, hit this level. Now the next level we want to watch out for is 171. So it's kind of what we're looking at there. HWNK. This is another one where it has a lot of swing trading potential, but it's very neutral right now. But again, if it reaches the lows of 34, forming a dip buy setup, then we can actually look into that more there. But yeah, since we have time, we'll probably actually just go through the dip buy criteria if there are no other comments or questions. But NTOIY. Yeah, no. CMS, pretty sure it's good. Yeah, 13.41, which is above market average. 84% trend score. Decent volume, great volume. Let's look at this. Let's see 1 minute. Wow, this is a great stock to trade. Obviously, very red on the day, but look how well this stock just shot up. Again, this is an example. Let's see, where did that come from? Right here. So using the doji candles to get in. So doji candle, doji candle, doji candle, waiting for a break or a green candle. After this green candle hit, that's kind of like indicative that we're going to be reversing trends. And when we're reversing trends, then that's a chance to make money. So reversing trends there, and then we had this chance to profit all the way to the upside. And this is kind of how trends work. Once a uptrend is established, then it breaks, and then a downtrend is established, and then that breaks, and then the downtrend is broken, then an uptrend is established, and then we just get back to question. And then the uptrend is broken, then the downtrend is established, and then the downtrend is broken, then the uptrend is established, and then the uptrend is broken, then the downtrend. So you just see the market works in phases, and identifying that, like, are we in an uptrend, downtrend, whatever, and then from there we can kind of like continue on. But yeah. But yes. HTBI with a performance, performance 7.25% return, 90%. Overall market is bringing it down. Stock rating is bringing it down. It is a type of a dip buy setup right now. But again, it's been trending down a bit too long for my taste. But yes, so that's kind of what we're looking at there. Yeah. So that's the fun stuff. That's about it from the market perspective. There's actually one. Let's actually look back into the PS1 minis. See, okay, here we go. Just like I expected a break of the high here that we mentioned earlier this morning on the live stream. Once we break this resistance high, so basically what happened is the market gapped down, pushed down hard on Friday, gapped down today, then started trading within a range. And so this range is very important. If the range breaks to the downside, we're going to see a lot of shorts. If the range breaks to the upside, we're going to see a lot of long. But the problem is we're seeing a lot being held down on this. And what I mean by that is we're pushing above this high, but then we keep getting rejected and pushing down. Break above this high, get down and pushing down. There's a lot of consolidation right now in the market. And what I mean by that is we're very range bound. We're not doing much. There's no clear direction. When we move up, we're not clearly moving up. When we move down, we're not clearly moving down. We're having a lot of indecision. And this indecision, especially on a Monday, is what I think is going to lead to a doji candle today. And what I mean by a doji candle today is I mean that we're going to have a lot of price action, but we're going to stay relatively the same level. We may reach a high, we may reach a low, but in the end, we're going to settle, and I bet the market is going to close in this range. And the market closes within this range, then we're going to have a doji candle on the daily chart, which is small body, long wicks. Long wicks meaning that it reached a large high and low between the day's trading hours, but it closed roughly where it opened. And so when we hit that doji candle for today, then we're going to have a down candle followed by a doji candle on the daily chart, and then a push higher. And so again, we'll see that nice stair step pattern up, hopefully have a positive Tuesday and Wednesday, some green trading days to open up a lot of opportunity for swing trading. So that's kind of what the potential for dip buying in the current market looks like. Again, if we kind of zoom out, we're going to see the same thing. Where we have the market kind of reversing and trending higher. So that's really what is on with the market today, is a lot of indecision, a lot of not really knowing what's going on. And so again, that's kind of where the market going. QQQ is going to be about the same. It's going to be more of the tech perspective on it. Cancel. So QQQ coming back. Again, QQQ, of course, is having a little red candle. If you look at this, not only are we trending down on QQQs, but also we have what is known as the head and shoulders pattern. You can see here, shoulder, head, shoulder, down. And we have support around here. So QQQ is also trying to form a doji candle. If you look at it on the daily chart, it's trying to form this little doji candle here. You see long wick, small body. And so again, I really think a doji candle is going to form today with the direction of pushing higher. Now, again, this is all going to change if we close above or below one of those trading ranges that we were discussing on the S&P minis or the S&P futures. So again, if the market closes above that range, we're going to have a positive. If it closes below that that range very negative, which is going to cause for a negative week. But again, overall, the market has lost a lot of value within the last 3 days of trading action. So that's kind of what's going on. Nothing much. Probably going to conclude the live stream there. Our typical schedule is this. We go into training segment, how stupid is stupid, a lot of live trading. But again, there is nothing happening today that we can take advantage of because it's a very range bound market. No stocks show any potential. So again, nothing too much to cover there. But again, that's kind of what the market is looking at right now. So that's really what's going on. Anyways, guys, for all those who tuned in, thank you so much. Again, we'll be doing the live stream this whole month to see if you guys like it and you guys want more of it. But again, thank you so much for those who watched and those who watched the replay. It means a lot. I know most of y'all are working at this hour, but I thought it'd be a great time to break down the market, talk about stuff, and give you a better perspective on what's going on. Once again, I am the Impeccable Investor. You can find me on Instagram, YouTube, podcasts, whatever. I am here to help swing traders profit. And again, if you want to get my personal watch list of stocks, this watch list that have consistently outbeat the market, stocks that I trade on a weekly and monthly basis to generate profit. If you want those top stocks, you can click, I believe it's the first link in the description below to get my free watch list. Anyways, guys, thank you so much for watching. I will see you tomorrow morning at 8 a.m. Central Standard Time. So again, see you guys tomorrow.